Today's episode might make you a little uncomfortable, and that's a good thing. We're talking about revenue that slips through your fingers every single day. And here's the truth. If you're not watching your revenue cycle closely, you're very likely seeing patients for free and you don't even know it. That's not hyperbole. We've seen it over and over again. Practices losing thousands, even hundreds of thousands of dollars annually because of small breakdowns, some of which happen before the patient even walks through the door. Today, we're going to track down where your money might be hiding, and more importantly, how to keep from losing money in the future. Welcome to Medical Money Matters, the podcast where you can find experts, answers, and resources so that you can achieve mastery over the financial and business aspects of your practice. Hello, everyone. I'm your host, Jill Arena. I began my career in accounting and finance, and I have more than 30 years of experience running medical groups. I own and operate a national healthcare consulting and revenue cycle company, and I am the author of Physician Heal Thy Financial Self. In 2020, I co-founded the Physician Leadership Project, and in 2025, I released Physician's Edge, the first of its kind online business education for physicians. My passion is to increase financial and business literacy for physicians. Episode 145. Where does your money hide? Finding lost revenue in the medical group revenue cycle. Welcome to the Medical Money Matters podcast, brought to you by Healthy Practices, where we explore smarter ways to manage the business side of medicine without losing sight of why we're here to provide excellent care. Today's episode might make you a little uncomfortable, and that's a good thing. We're talking about revenue that slips through your fingers every single day. And here's the truth. If you're not watching your revenue cycle closely, you're very likely seeing patients for free and you don't even know it. That's not hyperbole. We've seen it over and over again. Practices losing thousands, even hundreds of thousands of dollars annually because of small breakdowns, some of which happen before the patient even walks through the door. Today, we're going to track down where your money might be hiding, and more importantly, how to keep from losing money in the future. Let's start at the front door, eligibility verification. This is the first and sometimes biggest hole in the bucket. If your team doesn't verify insurance coverage before the patient arrives, you're at the mercy of luck. And luck is not a strategy. When a staff member assumes coverage is valid because it, quote, looks active in the system, quote, without checking the details, you open the door for denials. We've seen entire schedules full of high-dollar visits, imaging, procedures, even surgeries, denied because the patient's plan had terminated a week prior. Or they switched from commercial to Medicaid, but no one caught it. What does that mean? You just provided hundreds or thousands of dollars in services, and you won't get paid a dime. That's not a business model, that's charity care, and you didn't even know you were offering it. The fix: real-time eligibility tools, robust training, and policy enforcement. Staff need to confirm primary and secondary coverage, understand coordination of benefits flags, and collect accurate copays or coinsurance before the visit. Otherwise, the patient walks out with the care, and you're left holding the unpaid claim. Now, let's talk about timely filing. Every payer has its own deadlines. Some are generous, some are shockingly tight. But they all have one thing in common. If you miss the window, you're out of luck. No reimbursement, no appeal. The work was done, the resources spent, and you won't get paid. Again, you've just seen the patient for free. This happens more than most physicians and administrators realize. Claims are rejected and never followed up. Clearinghouse rejections sit unresolved. A biller didn't know that payer X has a 90-day deadline, not 180 days. Or the visit wasn't billed in time because someone was out sick and the backup person didn't catch the backlog. Sound familiar? One practice we worked with lost an entire month of therapy claims, tens of thousands of dollars, because the claims were submitted just 3 days after the timely filing limit. No amount of begging or appeal or documentation could fix it. And the kicker? The visits were coded, notes were complete, it just didn't get billed in time. Ouch. Talk about painful. Timely filing isn't just a back office issue, it's a financial survival issue. You need to build systems that flag approaching deadlines, track unbilled visits, and ensure rejections are worked within 24 to 48 hours. Otherwise, you're doing the work and then you're giving it away. Now let's talk about something that gets even less oversight but costs practices enormously: write-offs and adjustments. And here's a hard truth. If no one is reviewing the write-offs your revenue cycle team is taking, you are potentially giving away revenue that is fully collectible. We've seen billing teams write off claims simply because they were, quote, tired of fighting with the insurance company, quote. They got one denial, or they didn't know how to appeal, or the denial reason seemed ambiguous, so they adjusted it off and moved on. That's not a policy, that's a leak. And it's often invisible unless someone is actively reviewing those adjustments. Now, some write-offs are valid. Contractual adjustments? Absolutely. True bad debt after a full patient collection effort? Of course. But when you see trends like non-covered service or timely filing or payer-denied medical necessity repeatedly, and no one's investigating or searching for a systemic fix, that's a red flag. We reviewed one group's write-offs report and noticed $60,000 in denials over a 3-month period from just one payer, all marked payer policy non-covered. Turns out it was a simple modifier issue on a bundled service. Once corrected, the group recovered $42,000, but the rest? Already written off. Gone. Make it standard practice to review large adjustments monthly. Look at who is taking them, why, and whether the same issues are recurring. If your staff has carte blanche to write off difficult claims, they are inadvertently determining your fee schedule and your bottom line. That brings me to one of the most overlooked contributors to revenue loss: undertrained or underpaid revenue cycle staff. I know it's highly tempting to minimize payroll costs, especially for billing departments. But let me ask you this. Would you trust the financial future of your practice to the lowest paid person on your team? Because that's often what's happening. When a revenue cycle team doesn't have deep training or doesn't have time to do the job thoroughly, mistakes multiply. Codes get entered incorrectly, modifiers are missed, claims are submitted late, denials go unworked, appeals aren't filed, secondary insurance isn't billed, patients are charged the wrong amount and get frustrated, delaying or avoiding payment altogether. Every one of these errors adds up. Industry benchmarks show that poorly trained billing teams can lose anywhere from 5 to 15% of collectible revenue. If your practice generates $5 million a year, that's $250,000 to $750,000 in losses, and most of it preventable. Meanwhile, high-functioning revenue cycle teams often more than pay for themselves. They know how to code correctly, navigate payer rules successfully, escalate denials, and work patient collections ethically but effectively. They track key performance indicators and know their numbers: clean claim rates, denial rates, average days in accounts receivable, and they can spot a red flag before it becomes a financial bleed. Here's a reality check. It's not enough to have a, quote, billing person. You need revenue cycle professionals, people who understand both the technical and strategic side of the work. Whether they're in-house or outsourced, your billing team should function like a well-oiled machine, not a mystery black box that you just hope is working. And speaking of mystery, let's talk about the hidden places your money can hide in plain sight. You're listening to Medical Money Matters, a weekly podcast brought to you by Healthy Practices, a healthcare consulting and revenue cycle company dedicated to keeping our clients independent. Please reach out if we can do anything at all to support your practice. You can find more information online at healtheps.com. That's www.healtheps.com. Please follow or subscribe to get all future episodes downloaded as soon as they're released. One of the biggest is unmonitored refunds. I've seen practices refund thousands of dollars that weren't actually owed, often because of incorrect credit balances. Sometimes staff refund patients or insurance companies before doing the research. That's revenue you worked hard for and never should have to give back. Another, missing charges. Providers forget to submit for procedures, injectables, or diagnostic tests, or the system doesn't capture them correctly. If it's not billed, it's not collected. More care you've just given away. Then there's undercoding. I've had physicians tell me I bill all my visits as level 3s so I don't get audited. That sounds safe, but it's costing the practice money, and the physician is valuing his or her own work. If it's medically appropriate to bill a 99214 or a 99215, do it. Document it correctly and back it up and get paid for what you're worth. Simple as that. As we reviewed in episode 59, this is a huge boon for groups that take the time to figure it out or hire it out. Patient collections are another common leak. If staff aren't collecting copays or deductibles up front, or if patient statements are confusing or infrequent, you're leaving money on the table. Most patients want to pay what they owe, but if it's not clear or convenient, they delay. And here's a big one: duplicate billing or clearinghouse errors. Claims get rejected but never resubmitted. Or the claim goes out with an error, is rejected by the payer, and the cycle stops. No one follows up. That's a leak you'll only catch if someone is tracking rejections daily. You might think, that couldn't happen here. We're collecting 95%. But here's the thing. You may be collecting 95% of what you're billing, but if you're not billing accurately or missing charges altogether, you're collecting far less than what you could be. We've reviewed practices that thought they were collecting well, only to find out they were capturing 72% of collectible revenue after a full audit. That's a 28% shortfall, and that difference is often enough to fund new staff, technology, or facility upgrades. The key to plugging all of these leaks? Sophisticated revenue cycle professionals. This is no longer a job for someone who just, quote, knows billing. You need experts who understand payer contracts, denial trends, coding updates, billing workflows, and compliance requirement. Whether your revenue cycle is in-house or outsourced, someone needs to be watching performance, setting goals, and reporting on key indicators. Outsourcing doesn't mean set it and forget it. It still requires oversight, accountability, and regular check-ins to ensure targets are being met. And finally, none of this matters if you're not assessing your revenue cycle regularly. If you haven't done a full revenue cycle review in the past year, there's a very good chance you're missing something big. A good revenue cycle assessment should look at payer performance, how each plan is paying you and how quickly; denial trends, what's getting denied and why; adjustment reports, what's being written off and who's doing it; staff workflows and training gaps; charge capture audits, what's missing or undercoded; and finally, contractual versus actual collection rates. Monthly dashboards can help keep you on track, but at least once a quarter, take a deep dive. Ask the hard questions. Are we getting paid what we should be? Are we working our denials? Are we adjusting things we shouldn't? Are we training our team and monitoring the right data? Because here's the bottom line. Revenue cycle health isn't about having claims go out the door. It's about making sure the right money is coming back in and that every claim tells the full story of the work your team is doing. Let's stop working for free. Let's stop hoping our billing team, quote, has it covered. And let's start running our revenue cycle like the vital, high-stakes business function that it is. Thanks for joining me on this episode of the Medical Money Matters podcast. If you found value in today's conversation, please share this episode with your practice manager, your revenue cycle lead, or even your physician partners. Talk about where your money might be hiding and how you can start finding it. You can also reach out for a customized revenue cycle audit. We've helped dozens of medical groups uncover hidden revenue and build stronger billing operations that support sustainable growth. You can find us at healtheps.com. Don't forget to subscribe to the podcast so you'll never miss an episode. And if you're enjoying the show, leave us a review. It helps more practices find us and start making their money matter. For now, keep an eye on your revenue, invest in your team, and lead with financial clarity. Until next time. Front Office Revenue Cycle Education, an in-depth course on the impact your front desk has on your clinic's bottom line. This online, on-demand 2-hour course is led by seasoned revenue cycle experts who will teach your front office staff the importance of obtaining accurate patient demographic information, how to effectively collect money at the front desk, and their impact on the life cycle of an insurance claim. Available now online for $195 per person at www.healtheps.com under Courses and Force. Enroll your front office staff and watch your denials go away.